doing a lot with Repco at the moment. We're actually doing a 2,000 square metre Repco Max in Capalaba, which is about 15 minutes south of Brisbane CBD. So that's going to be a flagship store for them, and we're really excited. The grand opening is in about 3 weeks.
Welcome to the Burgess Rawson podcast. I am very excited to have Jamie Allen and Zomart He. Jamie, you are the Director of Investments and Business Development at Kinglake Group, and Zomart He, you head up our Asian Investor Services at Burgess Rawson. Thank you for joining me today.
Thank you, Ingrid.
Thanks, Ingrid.
Kinglake Group, Jamie, is an incredible story. 14 months young, and you're already purchasing transactions such as Sunbury. Tell me how the company came about and what your goals are.
So Kinglake Group started 14 months ago now, and we originally started the business with a really strategic focus on large format retail. And look, that stemmed from my background and my business partner's background in large format retail. And we just decided that the time was right for us to start Kinglake Group, and we've been lucky enough to put an array of deals together since then. We've recently handed over a site in Capalaba to Repco. We've recently purchased the Sunbury Showrooms, as you mentioned, and we've also got a couple of other deals in the pipeline, which is really exciting.
So Zomart, let's start with the property.
Yep.
Tell me the fundamentals of the property: rent, sale price, yield, and anchor tenants.
So the property is located in Sunbury, so it's in a very central location. It's very close to the Bunnings and everything else. The property is anchored by the Good Guys, Repco, and a few large format retail tenants. The site is over 12,000 square meters. The building's over 5,500. So the net income is just a touch under 1.2 mil. We sold it for 19.588 mil. The yield is a touch under 6%.
And Jamie, through Kinglake Properties, you were the purchaser. And thank you very much for joining us today. We really appreciate it. Tell me first of all about Kinglake Properties. Who are they and what do they do?
So Kinglake Group was established in 2024 with two of my business partners, Harry and Hamish, and it really was, I guess, a combination of years of putting together smaller deals for my old employer. Harry and I actually worked together at both over the last 5 years. So both in agency at CBRE and then at H5 Group more recently. So we decided that the time was right for us to start Kinglake Group, and that's what we did. And the strategy, I guess, was just laser focused on large format retail. It was a sector that we felt we knew. We'd put deals together. I was general manager at H5, and I'd say I was really hands-on with the deals, and Harry at the back end in terms of the numbers and putting the structures and the finances in place for these deals. It was a partnership that we were really enjoying, and it was the back end of 2023, started 2024 that we started Kinglake Group, and since then we've got deals that are small, deals that are large, and everything in between, and it's been an exciting journey to date. It's, 14, 15 months into the process, and it's I feel like the market's really shifted in the last 6 months, and large format retail is really at the forefront of a lot of people's minds, and we're seeing that. We're seeing some great results, and you guys know better than I, how strong a market large format retail is, and again, that's why our focus is pretty laser sharp on LFR and existing assets and adding value.
And was that day one? So when you started Kinglake in the only short 14 months, was it always going to be large format? Was that the initial goal?
Yeah, and it does stem back, looking back on COVID times, we saw deals that on paper during COVID, they stacked. So the new builds, the development space, new deals were easy to put together, and the development stock was fruitful. But with the increase in construction costs, we just saw deals fall over left, right, and centre, and pipelines dry up, and that's why we had, our focus when starting Kinglake Group was primarily to target existing assets that we could add value to. We want to alleviate any of the construction risk associated with development, and I guess that's probably what separates us from a developer, is that we don't take on construction risk. We don't want to sit at councils for 6, 12, 18 months, 2 years, which I have in a project over in South Australia before. So that's what we really like about the existing nature of large format, is that we can get in, a tenant can be trading within 4 months, the refurb can only be a couple of weeks long, and it just makes the whole process a lot more enjoyable, it's more fun, and the speed to market, it's a lot quicker.
And I think also large format tenants, they're incredible tenants. They're often ASX listed. They absolutely thrive during COVID. They've got incredible marketing, technology. They're very, very at the forefront of retail. Who are your favourite tenants, and what are the kind of tenants that you are angling for when you're looking at properties?
Got to be careful with how I answer this.
They're all your favourite,
Look,
equally.
they're all our favourites. And look, one of the things that we really enjoy, or I really enjoy, is the relationship you build with a tenant. Look, we're doing a lot with Repco at the moment. We're actually doing a 2,000 square metre Repco Max in Capalaba, which is about 15 minutes south of Brisbane CBD. So that's going to be a flagship store for them, and we're really excited. The grand opening is in about 3 weeks.
And how many square metres is that? Like, what size is a Repco Max?
So Repco Max is 2,000 square metres. So typically Repcos sit between sort of 700 and 1,000 square metres. But this is a new concept they brought in about 12 months ago. So it essentially is just a much bigger footprint. They also do have a trade offering as well. So it's sort of both the retail and the trade aspect of Repco, which, like you said, throughout COVID, they were, those style of businesses were just kept on growing and growing. And coming back to your question, look, the tools guys are obviously really active in the market.
Yeah.
Your super cheap orders of the world, your first choice liquor, even the pets guys, they were super resilient through COVID. I think that you just had to sort of look at your neighbour and see them coming home with a new pet. And look, that's obviously propped up that pet space, which has just gone crazy.
It totally has. And we're actually bringing a number of those to market next auction. Tell me, so how many deals has Kinglake Group put together in their last 14 months, and what was your favourite? Apart from Sunbury, of course.
Look, it's a really good question. We've put together 4 deals since inception. Probably my favourite is, look, it is Sunbury. I think that there was a lot of work that went into that. It was a big transaction for us. It was our biggest to date. And again, it was also just an exciting process to work with the consultants we did, work with Zomart to structure the deal, and pick up the phone to the tenants and say, hey, what do you guys think of your site? How are you trading? How can we improve it? As part of being a proactive asset manager, we love having those relationships with tenants, because it means that we're at the forefront. We understand how the asset's working. We can understand if there's some pressure points. There might be an issue with the building, and rather than going through the property management chain, well, they can just call us directly, and we like having that relationship. I think it builds a great long-term partnership with these tenants. And, we want them to be there for the next 20 years. I mean, we want the next purchaser of this site to say, hey, the last purchaser did a great job. We're really happy in our space, and we want to continue to stay here.
Yeah.
And it allows you to have long-term relationships with those tenants in other spaces as well. Because if this is, large format is where you want to be, you're going to put together more of these sites, you're going to buy more of them. To have great relationships with the major large format tenants is going to allow you to pick up that phone and have the conversation very quickly about future sites as well.
Yeah, look, absolutely. I think relationships in large format retail and other subsectors of property are just so important. And that's something that we really enjoy. As I mentioned, we really nurture those relationships, and we think that it's just something really important to protect. And it really probably actually does stem. A good mentor of mine, Sam Hirschberg, he was he really pressed that relationship piece.
Yes.
And I was watching him in meetings. I'd watch the relationships that he had with so many retailers, and I think that had a big influence on how we then shaped Kinglake Group, and really put an emphasis on making sure we're doing the right thing, making sure that we're putting deals together that aren't one-sided. At the end of the day, we've got one common goal, and that's to get the deal done. We don't want to see it as if we're on the other side of the fence, just going back and forth and using lawyers to try and finalise little key details in leases. It's really it should just be a phone call or even a WhatsApp these days.
100%. Yeah.
It's a lot more casual, I think, the approach that we want to take, and it's because we have a relationship to be able to do so.
Which is very true actually. And so even during the transaction, I can imagine so Jamie, you're calling the tenants and constantly asking the tenant how to improve the sites, from small things like you're cleaning the rubbish, fixing the fence, you do the gardening, into the fire complaints and everything else. So Kinglake Group is trying to look after the property from a holistic view.
It's a really interesting point, because we look at something like some cobwebs on the exterior of a property, And to clean something so small, so minuscule as that, let's call it $2,000,
Yep.
that can really frustrate a tenant if you don't do it.
Yep.
And it means that next time you go to renew them, or if you want to renegotiate something, or you need a favour, they'll remember that if you didn't action that straight away. And there's little things like that, they all add up. And that's something that we're trying to make sure that we're on top of, whether it's, rubbish in a car park.
Yep.
It's such an easy thing to do, to get someone down there. Even I'll go down there and pick it up.
Yep.
It's important to make sure that, your tenant's happy.
Yeah.
I agree. So drilling into the Sunbury purchase, I've noticed with some of your other properties, you've kept them for varying amounts of time. Most of our listeners are generational purchasers. They will hold their properties for 10 or 20 years and never let go of them. What is your horizon on how long you look to keep Sunbury, and why? What is your divestment strategy? How do you look at that property?
I think when we're looking at each deal, they all have a different requirement, and we piece deals together with varying investors just based on what the asset needs or wants. So we can take Supercheap Auto and Faulkner as an example. That was a better home living box that needed quite a bit of work to get it to a standard for Supercheap. We had in the back of our mind that was going to be a short-term hold. We were pretty early on in terms of the evolution of our business. We wanted to obviously start doing deals and build a track record, and we saw that as get in, get out. We can put it on our track record, and we can move on and give our investors a bit of confidence that we actually do know what we're doing. Which, look, it's half the battle. I mean, even Sunbury, you go into a room and you're sort of pitching a deal. It's never as simple as, hey, this is the rent, these are the tenants. They want to trust who they're investing with. And when you're looking after other people's money, it's daunting. It's not easy, and you got to do the right thing.
How are you funding these? Like, how are you structuring your debt? Are you lending money? How are you actually structuring the finance of these things?
So we raise capital from various sources. So it really depends on the ticket size and the style of the transaction. But look, we have some institutional capital partners that we've partnered with. And they've been really good. They really understand the space like we do. They want us to be the expert in our space, and we let them be the expert in their space. Look, I've been caught out before trying to rattle the can and raise money before, and it's not easy.
No.
It takes a lot of time, and it takes me away from being able to originate and put deals together if I'm forever pitching a deal. And look, the metrics can do one thing, and they can paint a pretty picture on an IRR basis, and you can have great debt, and the deal can look really great, but you need the capital support to get the deal over the line. And we're really lucky that we've got different capital partners for different deals. And look, Sunbury, that we had an institutional capital partner who we did a JV with on that. And there's smaller deals where we'll raise money internally, we'll syndicate. And again, it really just depends on the deal. And you're talking about timeframes. We've got an asset down in Bairnsdale, which is the Repco there, that will probably hold that for, forever, hopefully.
And why?
Oh, look, it's the right size for us as a business. We don't. It's a 700 square metre showroom. It's not an LFI centre, or it's not a multi-million-dollar property. We like those smaller deals, and we really like Repco as a tenant. We think they're just a great tenant, and we really enjoy working with them. So that's one where we think will hold long term. And again, the sticky nature of large format tenants means that I'm not worried about what they're thinking, even in 3 or 4 or 5 years' time when their lease is coming out. But look, you're right. There are smaller deals where we, as a business, will add as much value as we can. And once we get to a point where we don't think we've got any more value to give, whether it's through, property improvements or maybe restructuring a lease, we'll look to divest. And I think our strategy is very much aligned with making sure that we get an asset to a point where we're really happy with it, and then we let that value pass on to the next purchaser. So it's really just about ensuring that we've created as much value as possible before passing on, and hopefully the next purchaser can then enjoy the fruits of, I guess, what we've put in place.
And I'm really interested about your background, Jamie. So you mentioned that you were an agent with CBRE, and obviously we're all agents in this room. So how do you think that your agency years or your agency experience has influenced or provided you the skills to do Kinglake Group now?
Yeah, look, it's a great question, and it's interesting reflecting on my time. I originally started in property, it was 10 years ago, at Hare and Todd White, so I worked in their valuations team very briefly, and then transitioned to CBRE. I actually worked in their office leasing team. So I think that working day to day with leases in that space really helped me understand the value of a good lease and how much value that brings to your property. When we're structuring leases now, Harry Nettlefold, my business partner, he's also, he was at CBRE as well. He worked in the large format leasing team. And we just know that there's just so much value and importance on the leases. It's something that so often we can review a lease at a property and within 5 minutes go, this is not for us.
Yeah.
It could be a gross structure with all maintenance on the landlord, and there can just be some really intricate details that people quite often miss.
And I think that's the agency world, really. But I suppose I'm keen to understand, Zomart, your client's an ex-agent.
Yep.
What's it like selling a property to an agent?
I think it's pretty easy because so we can all talk about the common language, and we all know the leases and everything else. So there's no education I need to do with Jamie. So he just knows everything. So we just talk straightforward. I think that's the best.
Yeah, it's certainly given me a really good basis of understanding and structuring deals, having that agency background. And yeah, transacting is the most important part of doing deals. And I think that agency background has helped that.
And what's next for Kinglake Group? What kind of assets? I mean, obviously large format assets. Are you looking all over Australia? Are you staying within, obviously, Queensland you mentioned and Victoria? Is there a consideration into New South Wales? Where is Kinglake Group going next?
It's a great question. We really like Queensland as a market. We have spent a lot of time reviewing sites and putting forward expressions of interest with not a whole lot of luck. And look, it's the nature of the game, but we really like Queensland. I think the fundamentals there with the Olympics, there's $7 billion that the government's spending. All the roads are being upgraded. The infrastructure spend, as I said, is going through the roof. So we really like the Queensland market, and we certainly think that there's plenty of rental growth there. And look, even working with the tenants you hear from them firsthand how strong and well their stores perform in Queensland, especially in and around Brisbane. So I think strategically, and not giving away all our secrets, that's it's certainly a market that we really like. And if we could find Capalabas of the world every few months, we'd love that. We need to start working with Zomart a little bit more closely to unlock the next opportunity.
And Queensland's obviously a huge territory. Are you focusing mainly on Brisbane, or are you also looking at some of Far North Queensland and different regional areas? Where are you looking specifically in Queensland?
Yeah, look, we think there's plenty of value in Far North Queensland. We've looked at assets in Townsville. We looked at one recently in Cairns. So we don't discriminate geographically. Zomart and I actually did a deal in Innisfail, which is just south of Cairns, a couple of years ago. So, look, I do know that area well, and we certainly think that there's demand from retailers. Well, I know there's demand from retailers, even in these sort of quirky towns that you've probably never heard of before. And we certainly think that there's plenty of growth still in Queensland in those markets. And
we're seeing that all across Burgess Rawson. We find that our clients are looking at an industry first and location second. So if they want a fast food or they want a large format, the location is secondary to the actual, the tenant and the property in the first place. So we certainly see that our clients look industry first and then location, and apply a relative yield or pricing based on the location. But first and foremost is the attraction of the tenant, because a Repco in Queensland and a Repco in Victoria, they're a great tenant regardless of where they're located. And generally they need the same things. They need the same size box. They will approach the lease the same way as well. So our clients tend to look at industry first and then location second. The quality of a Repco tenant in Queensland versus Victoria is basically the same. The leases are very common. You know what you're getting. You know who's going to be paying your rent. How do you look at, for example, a Repco in Victoria versus Queensland?
I think you've got to sort of strip it back and look at the demographics and understand these towns. And a lot of the time a retailer wants to go into a town, they're not going to have a population of less than, say, 10,000 people. So one of the key hurdles for us as a business is we don't look in towns that have a smaller population than 10,000. I think that just gives an investor and your investors confidence that they're going to be here for the long term. And look, you're right, there's certainly a lot of value. If you're looking at an LFR tenant in Queensland versus Victoria, there's a lot of value in the regions, and that's, again, a big target of ours, given the stamp duty concessions. Again, there's a lot of rental growth still to be had in the regions, and that's why I think if you're an investor and you can pick up something that's attractive in a region, you've got a lot of long-term growth, where in the city, in the metro markets, you're not capped, but you're not going to get that rapid growth that we've seen in the regions, especially with the the demand from these LFR tenants. So I think it's strategic to be looking in these regional towns.
And we've long believed in that at Burgess Rawson. Obviously, we sell an incredible amount of regional property, but your yield of a Hungry Jack's in Metro Melbourne versus your yield of a Hungry Jack's in a regional town, there's a greater return on your equity in a regional town, but you're still getting the same quality tenant, you're getting the same great build, you're getting the same great property. So the underlying land value can produce a lot of value for investors as well. So if investors are walking away and saying, right, what can I learn from Kinglake Group? I'm hearing towns of population greater than 10,000. I'm hearing quality tenants, understanding what they need and how to provide that to them, and placing relationships at the top of your bucket. And I'm hearing net leases. What else have I missed? Is there anything else that our investors should be looking at when they're looking through the lens of a fund manager like yourselves?
And look, we do take a bit of a different lens. We're obviously very proactive and we want to be, but yeah, look, I just think that that relationship piece with your tenant, you want to stay close to them, and I think that's going to give you a lot of long-term comfort if you can pick up the phone to your tenant immediately and understand their property and understand any touch points. I think it's going to go a long way in ensuring that long-term, as a property investor, you can, you know that your asset's working for you.
Yeah. And Zoma, for you, you've got a client here. You know exactly what they want. You know exactly what they need. So, what kind of takeaways would you have from the Sunbury transaction that you would move forward with?
I think just also a long-term relationship. So with the client, basically, because Jamie and I we've been doing deals for the last 2 or 3 years. I really appreciate the relationship, and also I want that relationship to be a long-term, in 20, 30 years. I think also that's the case basically in every single transaction now, or that's the case in running any successful business. It's a long-term relationship, basically. So, yeah. So thank you, Jamie. So I really appreciate it.
Thanks so much.
So, Jamie, what is next for Kinglake Group?
So we're really excited about the next 6 to 12 months. We think the market's really shifted. We think there's a lot of increased or improved sentiment in the market. And long term, we've got a view that we want to build a company that has upwards of $200 million worth of assets under management. And at the moment, we're almost halfway to that. And
in 14 months.
Yeah, look, Sunbury helps. It does. But look, we recently appointed Roger Till as well as non-executive advisor. And Roger's an industry veteran. He spent 10 years as head of markets at Lendlease, and more recently he was an advisor to both the government and Melbourne City Council. So we really think that now's the time for us to continue our path on our growth trajectory, and hopefully we can piece together some more deals, specifically in that large format retail space, which is obviously the space that we play in. And yeah, we think the next 6 months it's going to be really exciting.
And how do you feel competition will play into that? Obviously, there's a lot of talk of interest rates dropping. We don't know what's going to happen. But, certainly in Burgess Rawson, we're hearing much more buyer inquiry is increasing, the market depth. How do you compete when you're buying properties as more private investors enter the market?
Yeah, look, it's a really good question. And our strategy is very much aligned with purchasing off-market. So all the sites that we've bought to date were off-market, whether they've been for lease, for sale. That's one of our key, core pillars at Kinglake Group is to purchase off-market. We think that's where you get the most value. On-market campaigns can be tricky, and we think that a point of differentiation, if you want to be competitive in this market, is just being across all the stock and forever be picking up the phones and making calls. And you're right, once interest rates do drop, it just brings that competition back in. And we saw a lot of institutional capital sort of sit on the sidelines the last 12 months, and they've just started to bring that back in. And there's going to be a lot more competition for these assets over the next 6 to 12 months. That's going to be for sure.
Fantastic. Well, I really appreciate you both being here today. Thank you for your time.
Thank you, Ingrid.
And onwards and upwards to the next property. I'm going to watch very closely as to what you buy next.
It's very exciting. Thanks for having me, and hopefully in the next sort of 12 to 15 months, who knows, I could be on again.
Can't wait.
Perfect.
Thank you.